Have you ever stopped to really think about where your money is working hardest for you? It's a simple question, but one that holds the key to unlocking your financial potential. Let's delve into the world of savings strategies. Your savings strategy is essentially your financial game plan. It's how you decide where to store your hard-earned cash, how much to keep on hand for emergencies, and how much to set aside for future goals. It's about balance, risk, and reward. But why should you care about where your money is being saved? Well, different savings options offer different benefits. Some might provide security, others higher returns, and some a mix of both. The choice you make can significantly influence your financial growth. Understanding your savings strategy is not about becoming a financial wizard overnight. It's about making informed decisions that align with your financial goals. The place where you save your money can make a significant difference in your financial growth. So, let's explore the possibilities together. Banks have long been the traditional go-to for savings, but are they really the best option? Let's ponder on that. Banks are familiar, accessible, and offer a sense of security that's hard to beat. They're like the cozy childhood home of your money, providing a safe place for it to rest and grow, albeit slowly. With interest rates typically ranging from 1 to 2%, your savings in a bank will increase over time, but at a pace that might seem akin to watching paint dry. Accessibility is another feather in the cap for banks. Need to withdraw funds for an unexpected expense? No problem. Banks offer easy access to your money, allowing you to withdraw or deposit funds as and when needed. However, it's not all rosy. The interest rates offered by banks may not always keep pace with inflation. In simple terms, inflation is the rate at which the general level of prices for goods and services is rising. If the inflation rate is higher than your bank's interest rate, your savings will lose purchasing power over time. That's a bit like running on a treadmill that's slowly speeding up. You're working hard, but not really getting anywhere. Moreover, the low interest rates mean that your money is growing at a snail's pace. If you're saving for a significant goal, like buying a house or funding your retirement, a bank savings account might not get you there as quickly as other investment options. While banks offer a sense of security, the returns might not always be the most lucrative. The stock market can be a profitable arena for your savings, but it's not without its risks. Picture a world of high returns, where your savings aren't just sitting idly but are actively multiplying. That's the allure of the stock market. With the right investments, the potential for growth can far exceed traditional savings options. However, it's essential to remember that the higher the potential returns, the higher the risks involved. Succeeding in the stock market is not a matter of luck, but rather it's about knowledge, research, and understanding your risk tolerance. So, before diving in, get to know the market. Understand the companies you're investing in, their performance history, and their potential for future growth. Remember, it's not just about buying low and selling high, it's about making informed decisions. Risk tolerance is another key factor. Can you sleep at night knowing your investments might fluctuate in value? If the answer is yes, then you might have the stomach for stocks. If the answer is no, then perhaps a more conservative investment approach would suit you better. Lastly, let's touch on the concept of diversification. Putting all your eggs in one basket is rarely a good idea, especially in the stock market. Diversification, or spreading your investments across various sectors and companies, can help mitigate risk and increase the potential for returns. The stock market can offer growth for your savings, but it requires careful planning and risk management. Real estate has been a tried and true method of wealth accumulation. But is it the right place for your savings? Let's break it down. Firstly, real estate, like any other investment, has its upsides. One of the primary benefits is property appreciation. Over time, the value of real estate typically increases, allowing your initial investment to grow. This appreciation can be a powerful tool for wealth accumulation. Moreover, if you're renting out your property, you'll have a consistent stream of rental income, which could serve as a steady supplement to your portfolio. However, real estate isn't without its drawbacks. Market volatility can impact real estate prices, and downturns can lead to significant losses. Unlike stocks or bonds, real estate is not as easily liquidated. If you need to access your savings quickly, selling a property might not be the fastest route. Investing in real estate also requires considerable upfront capital. Buying a property is a significant financial commitment, and you'll need a substantial amount of money to get started. Plus, don't forget the ongoing costs like maintenance, taxes, and insurance. Additionally, real estate requires active management. Whether it's dealing with tenants, handling repairs, or navigating local property laws, managing a property can be time-consuming and complex. In conclusion, real estate can be a profitable investment, but it also requires substantial capital and management. Weigh these factors carefully when considering if real estate is the right savings vehicle for you. So, where is the best place to save your money? The answer isn't as straightforward as you might think. Let's take a quick journey back through the paths we've explored. First, we delved into traditional savings options, such as savings accounts and certificates of deposit. They offer a sense of security with a stable return, although usually modest. This path is best for those who prefer safety over high returns and have a shorter time horizon. Next, we ventured into the volatile yet potentially rewarding world of the stock market. This path can lead to substantial growth over time, but it does come with its fair share of risks. It's a solid choice for those with a higher risk tolerance and a longer time horizon. Then we explored the avenue of real estate investments. Real estate can provide both income and appreciation, but it requires significant upfront capital and ongoing management. This path suits those with a medium to high risk tolerance, a substantial initial investment, and a longer time horizon. As we've seen, each place to save your money has its own set of advantages and drawbacks. The choice comes down to your individual financial goals, risk tolerance, and time horizon. Are you saving for a short-term goal or a long-term dream? How much risk can you stomach? How patient can you be? The best place to save your money is where it aligns with your financial goals, risk tolerance, and time horizon. Remember, it's not about the best place, but the right place for you.